Hey everybody, welcome to Stock Trading Pro. My name is Pete Renzulli. We have a ton of stuff to talk about today. It's the first live stream that we're doing, the first video that we're doing for 2023. What a day on Friday that set up this entire week. The big question today is, was that an accumulation day in the stock market, or was it simply short covering rally? So everything that we're about to break down today, we're going to use the stock market power pyramid, which starts at the market, works our way up to sectors, goes into industry groups, and then specific stock picks. So we have a bunch of stocks to take a look at today. You're going to have a lot of actionable ideas today. But first, the big thing, we got some really amazing lessons that happened on Friday. Two really big lessons that I'm going to do a deep dive into. We're actually going to break down our newsletter. We're going to actually go straight into the newsletter, and you're going to be able to get a copy of this as the video unfolds. So stick around. We have a ton of good stuff to talk about. If anything we talk about today is new to you, or if you have any follow-up questions, make sure you leave a comment below the video as well. So we'll be right back. Okay, so first I want to say Happy New Year to everybody. I'm really excited about being here. Hopefully you've had an amazing holiday season, whatever you celebrate out there. Hopefully everybody is ready to go for a big new year. We're not going to hold anything back right now. We're going to jump right into it. First, I want to give everybody a visual of what we're going to be talking about right now, which is this. This is the stock market power pyramid, and you're going to see us working our way up the pyramid into industry groups and then getting into some very, very specific stock picks. But first, actually, I want to say hello to a few people. Kim, thank you, Kim, so much. Hope you're having a great day today. Raphael, always a pleasure to see you. And Don, I haven't spoken in a while. Hope you're doing well and hope you had a nice holiday. So we're going to get right into it. There is a lot of stuff to talk about today, but most of this is fueled off of last Friday's bullish rally. So we're actually going to start there because we want to make sure that we have context for everything that we're about to talk about. And we're also going to talk about Starbucks and the reversal that Starbucks had. But this is really where we're starting. Now, normally we're just looking at the price action. We're kind of dropping in usually the 50-period moving average. But the big thing that happened on Friday is the way that the market not only finally broke out of this trading range, or did it actually break out, but we also have this massive, massive volume. Oh, actually, before I forget, one thing I want to talk about. In today's daily ticker newsletter, we have an entire breakdown on the options market as well, the 2022 options market, what happened, why some of you might have found it a little bit challenging to trade in 2022, and how to fix it. So that's actually going to be a part of what I'm going to go over right now. We also have a guest contribution today from Lynn Ramirez, one of our moderators inside of Stock Trading Pro. The big question, again, was it accumulation? Was it actually a breakout in the stock market? And did it fuel new bullish stock picks that we should be paying attention to? So we're actually going to jump right in and we're going to hop right into the newsletter. And by the way, you're going to be able to get a copy of this newsletter today, so you can actually print it out for yourself and highlight. There's a lot of good stuff in here today. But I especially want to talk about the lessons from Friday. If there's anything that really came out in a big way from 2022, was the speed with which the market and sector rotation happened. It happened really quickly. And a lot of people said that it happened too fast and they couldn't keep up with it. And really what it comes down to, as I'm about to show you, if your software is set up properly, your software is going to tell you what to do in a heartbeat. That's a part of tape reading, and you need to set that time up. You need to have one way of doing things all the time. When you are switching strategies, switching from moving averages to candlesticks to stochastics to MACD to Bollinger Bands to Keltner Trends, and you're all over the place, it's very hard to be consistent. So if I can give you one big, really big insight that we've really been focusing on in the community this year, is pick one strategy and pick one way to look at the market all of the time. The consistency that you are looking for in the stock market comes from the consistency with which you follow your plan. It does not come from predicting stocks. It comes from having an edge and flawlessly following your edge. But that's actually now going to take us right into the big lesson that we had from Friday, which I'm super pumped to talk about. So we set the stage here with how the market actually unfolded on Friday. Accumulation day, closed near the high, big volume, finally breaking out of this range. You can see that we're actually getting follow through. Now, before we do a little bit deeper dive here, I want to be clear about this. Can we follow up that act on Friday? One day, amazing, especially if you were a day trader on Friday. You got a lot of stuff that followed through, open near the low, closed near the high. Beautiful, beautiful price action on Friday. But let's remember, our job, order flow and tape reading, and that first part of order flow is big money doing something. They're actually making real commitments in the market. One day is special. Can you do it twice? Can we go well bid? Now, well bid on the daily charts would keep us out of that trading range. And again, let's just go back into what that looks like. Well bid on the daily chart, if we can actually bring this in here, is we want to see this. We want to see the market have higher highs and higher lows, which would also get us out of this window. If we get a well bid candlestick and we get some good volume on it, then we're cooking with gas. Then the shorts are really going to be squeezed, because what ends up happening is we had bearish to neutral. And actually, I'll show you what that looks like here. This has really been the tape that we've had for the better part of the last few months. But if we can kind of zoom in over here on the last 4 weeks, we had a little bit of bearish price action after we sold off hard on economic data. Let me actually zoom that in a little bit so you could read it. Big down move on economic data, right? CPI and the FOMC announcement. This was kind of the bearish echo, but look at what we've seen over here. We've seen a lot of sideways price action, and then Friday. So here's the first big lesson before we get into the actual newsletter, because I want to break it down. There's a ton of stuff in there today, and stock picks. That's the big thing. I want to make sure you stick around for the stock picks. If you found the last 4 weeks of trading, especially December, challenging, and you were doubting whether or not you knew what you were doing, if you feel like you forgot how to trade and that kind of stuff, you can't fight the tape. So sometimes it's like there's steak on the table and sometimes there's, fast food on the table. December was fast food. That was it. There was really few pockets of opportunity. There was one sector that was ridiculously strong. We were talking about it virtually every day. I hope you got some of it. And of course, I'm talking about the industrials. We're going to get back to that in a second. But really, the biggest thing I want to talk about right now, which is your mental account. December was not a perfect month of trading. And again, our job is to find the order flow and take advantage of it. If it's positive and super strong or super obvious, better way to put it, on a short-term basis, we can take advantage of it. But look at what happened in the bigger picture of the market as far as sector rotation is concerned. It was pretty neutral. Now, just to give you an idea what neutral means on these on the research that I provide for everybody every day, neutral means that it was less than 3% over 5 days or less than negative 3%. So again, if over 5 days it couldn't go up at least 1% on average per day, it was nothing significant. So what I really want to get across here for you, especially now heading into the new year, there's a difference between you did not trade well versus the market was really tough. You recognized it and you kept your risk profile smaller to match that tougher market. So you really need to recognize, not only do you need to recognize what's happening in the moment and trade accordingly, but you also have to be nice to yourself. Like I'm always positive all the time. I like to see the best part of everything. And a big part of trading is we can really get negative. Like there's negative Nancy in our head all the time. And we start to get really down on ourselves. You really need to recognize, was it tough market conditions or did I just simply not read it well? If you had a tough December, take a step back, be nice to yourself, and ask yourself, wow, that was challenging. Why didn't I see it? And if you want, you could take a screenshot of this. I'm specifically talking about over here. Okay, so now we're actually going to get into the newsletter. There is a ton of stuff in here that I want to cover. And actually, you can see here all the way down here, we also have a full breakdown of the options market if you happen to be an options trade. But we're going to work our way back up towards the top. And I want to talk about Friday. Friday was a perfect day for two very important reasons. Actually, you know what? I normally break the market down, but I want to pay. Everybody has a limited amount of time. I want to actually get right into the stock picks first. I'm going to go right into sector rotation. We're going to go right into the industry groups. If you want, you can take a screenshot of this. If not, you could actually replay the video again. So I'm going to do the picks, and then I'm going to come back to the lessons because I want to give you plenty of time to actually get in there and decide if any of these stocks that meet the criteria for sector rotation, industry group rotation, and bullish order flow match your criteria. We'll get those out of the way. We'll get this meeting done, and then we'll go do our 10,000 steps so we can actually get kind of ready for the day. All right. So let's kind of hop on down, and we're actually going to go right here into sector rotation. All right. So the Bulls hosted a last-minute party, and everyone showed up. So obviously, we're talking about this day on Friday. We're talking about this kind of bullish move on Friday. Now we're looking for this to follow up, right? Really, really clean, right? By the way, we have our end of year review sessions every Monday now. It's actually gone on 6 hours of training. We ask everybody in our community what absolutely did not work on 2022 for you, and absolutely what did work, and how can you do more of that. By far, the two biggest things that are coming out of it, actually tonight's our next session. Number one is not having patience, fear of missing out, not getting good entries, exiting trades too soon. That's absolutely the big first one. The second one is recognizing market conditions and price action in the moment, and not 9 o'clock at night. We're like, oh my gosh, how did I not see this? It was beautiful. Like, again, going into this context of this particular chart right here, how do you not see this when it's unfolding? And I'm going to tell you the secret of that right now. The way to not miss entries, or to spin that on the positive side and not use those double negatives, the way to capture all of the trades that you planned for is to narrow what you're looking for. Narrow the list of stocks that you can currently handle, but more importantly, narrow the price action that you're looking for. Too many traders are trying to find everything, every single strategy they've ever seen, everything that they've ever read in a trading book, and they're trying to do that every single trade. Only look for a handful of setups, and then that becomes your moneymaker. Only when you are making money on your best setups consistently should you then start to expand your trading business into maybe a bigger list of stocks, maybe more share size, and then maybe you start adding second or third trading strategies. So if you want to start to recognize price action in the moment and capitalize on some of these just absolutely amazing, amazing opportunities, it is really critical that you narrow down and focus. Now, a lot of people think that narrowing down means you're going to miss opportunity, when nothing could be further from the truth. What you actually do is you actually now gain a deeper knowledge of how those stocks trade, and you'll know when to scale back, cut it down a little bit on your risk. But more importantly, when you get a day like Friday and everything lines up, you'll be like, oh my gosh, there it is. I got to go in and get it. And it's those pockets of opportunity. It could be a day, it could be a week, it could be a month, that could make your entire week or year. You don't need all of your trades to work out. You need to step up and recognize when it's a little tougher and lower your risk profile. But just as importantly, you need to understand when, oh my gosh, there's a filet mignon on my table right now and it's free. I got to go and get it. You need to recognize the difference. And the only way to recognize that difference in the stock market is by knowing exactly what you're looking for. If you're missing them, you're probably looking at too much right now. Narrow that down, and I promise you, you will find some better, more consistent results. Okay, so let's break down some of the lessons from Friday. All right, the Bulls hosted a last-minute party. Everyone showed up. What a difference a couple of days can make. So again, obviously, we're talking about this right here. Let me actually zoom that out a little bit. We're talking about this right here compared to how this showed up over here. So we want to make sure everybody has full context for what we're looking at. That's what it looked like right there. Okay, so let's actually zoom this in again. All right, after weeks and weeks of flip-flopping, which is what we just talked about, backed by a bearish bias, we had that big push down after the bearish economic data and the Fed, we got an accumulation day. So if you don't know what accumulation day means, I'm going to actually highlight this for you so you can kind of go into this and take notes. So we're looking at a heavy volume day and a close near the high. So good big green candlestick, right? So that's actually what we're looking at right there. Basic materials moved to the top of the list and set up a few clean breakouts, right? A couple of them are at the tail end of momentum. So I just want to point out what that means, beyond the optimal entry. So this is actually a part of trading that a lot of people mess up, where you find fantastic ideas, but you're buying them too late. So what we call the optimal entry is, if you hit that buy button right now, how much profit potential is still left based on what the stock normally does. Now, if you want to follow along with me, you can click the link below the video. You can actually make a copy of this document yourself if you want to go down and scroll with me through this. All right, so what I want to talk about, I want to show you, because we actually have AEM, NEM, and LYB that match this criteria. So I'm going to go back out to the daily charts, and we're going to start out with LYB. So what's kind of interesting here about LYB, and you might pull up the scan, you might be like, oh my gosh, we talked about it. Look at amazing volume. Look at the amazing candle doing everything we want it to do, right? But then you zoom out a little bit and you're like, wow, sellers keep coming in and smashing this stock down right around $90. So although the stock is displaying really good bullish momentum right now, the stock has now rallied into resistance. And again, keep support and resistance simple. Where's the last place sellers did something significant? And it's after a move of what it normally does. So if you're new to the channel, I just want to really explain this to you because it's very, very important. It's going to help with your timing. Okay. And by the way, if you are new to the channel, do me a favor, hit that subscribe button if we're doing a good job for you, and make sure you hit that thumbs up. The average true move is if you look at a stock, if you look at what it does in a normal bullish move, or if you look at what it does in a normal bearish move, most stocks have personalities, which is really cool because, again, going back to what I said before about narrowing that list down, when you narrow your list down, you learn the personalities of the stock. So, for example, I'm just going to use round numbers. If in a bullish move, a stock normally moves $10, just to use as an example, and the stock pushed up and paused. So now you're kind of resetting the next $10 move. So that's what we might call the optimal entry, right? It just kind of makes sense. It's the place where risk is the smallest and the potential reward is the greatest based on what the stock normally does. So that's called the optimal entry. And we call that means the stock has room to go, right? So the likely profit potential justifies the risk for that trade. But now let's kind of flip it a little bit. And we're going to actually use this example right here in LYB. And let me actually zoom this out a little bit so it's a little bit easier to see. LYB has now not only rallied, let's again, just using round numbers, let's say it normally moves 10, it's already gone 7.5, maybe even a little bit more than that. So you got this little bit of potential when all of this was already taken up. Plus, it's right near a resistance level where sellers have been coming in and smashing it down. So while LYB is not only in the right sector, and I'll remind you what that looks like in a second. It's not only in the right sector, it's not only displaying tremendous volume on Friday, tremendous recent price action. It's not a good entry today for a new swing trade because all of this has already been taken up and there's a wall there. So what we need to do in the couple of stocks that I'm going to show you right now, LYB, NEM, we're going to go through that right now. Some of them are ready to go. Some of them we need to wait for a pause to reset that next average true move. If what I just taught you happens to be new, just rewind the video. You can watch it again a little bit later and take good notes. I promise you, when you understand optimal entry and how to spot what your stock normally does, because that's a list of stocks you trade every day, you will be shocked at how many times you were buying too late. You stop yourself. You say, wait, let's reset here and get a better entry. You will find that you will get stopped out a lot less on good ideas, and you'll actually have good entries into those new trades. So to give you an example, on the other side of the market, the bearish side, as the S&P 500 or the SPY ETF has been going down, the average true move on the downside in the SPY, let me actually pull that up for you, and you can actually measure these out. It's kind of cool. The average true move on the downside during these bearish moves, let me actually make that a little bit bigger for you, during these pushes to the downside, after it resets, and again, you can see push down, reset, push down, reset, push down, right? The average move to the downside is between $30 and $35. Now you'd be like, wow, okay, what does that mean? Well, think about this. If you're thinking about buying a stock in the that's in the S&P 500, or if it happens to be going to the upside, the same thing on the other side of the market. If it's already gone 30 and you're looking at buying, well, what's the upside potential for that risk? Again, as traders, we want things to be as simple as possible. And quite honestly, we want it to have common sense. If it's already gone what it normally does it really make sense to buy at that moment when there's not that much left on the idea? It doesn't. And that's a timing issue. Okay. So that's good ideas versus timing. You need to work those two things together. All right. So let's get back into the newsletter. I want to make sure that you have everything you need. So again, AEM, DD, LYB, and NEM. So if we go through NEM here, you can actually see that NEM is also beyond the optimal entry. And you can see right here, based on what it normally does, it's had a nice rally, but now it's at resistance. AEM is a little bit different. AEM is actually beyond where we could say sellers have come in, and now it's actually paused for 3 days above that level. So out of all of those right now, I'd probably be leaning more towards AEM as an immediate trade because the others have gone too far recently and they're hitting resistance. Now, something that comes up all the time that I just want to kind of like answer that before the question gets asked is it sounds like we're putting a limit on what a stock can do. And that nothing is further from the truth. What we need to do, the decisions we need to make when we put on a trade, we're accepting risk, right? We put that trade on, we're accepting risk. All we're doing when we're talking about the optimal entry and what the stock normally does is we're saying if we buy right now, what kind of risk matches the immediate reward? We're not saying that's all it can do. We're talking at the moment that we're looking to buy. If you happen to buy it down here and now it's up here and it's gone its average true move, cool, hold on. It doesn't mean it can't continue. It just means that you're probably going to need to reset before the next move. Again, keep it common sense. If it's hard to find, it's not there. But when it's obvious, you need to get in there and start placing those orders because you should have the confidence because you did the work. All right. So that's the first part. That's actually the sector rotation and the top of the list. Again, if we go over here, you can see basic materials is green across the board, which is definitely a place that you want to start. Okay. So working our way down, following the money. Again, no pun intended. Financials march higher. Right. Financials march higher. And again, there's a ton of bank earnings this Friday. So you need to be aware of this as well. If you are taking a look at looking at some of the bank earnings, trading some of the bank stocks this week. We'll actually get into JP Morgan in a second. So if we kind of zoom down into Friday, you'll see that we got Citigroup, Wells Fargo, JP Morgan, Bank of America, and Bank of New York, right? So if we're looking at let me pull this over again. If we're looking at the bank stocks, which showed good relative strength on Friday, we need to make sure that we are in the right stocks at the right time. So out of all of those, I just want to point out JP Morgan, which is going to have a lot of my attention this week. JP Morgan has had a nice rally for the last week and a half, but now it's kind of cool. Even with just the information I just gave you, you can actually see that JP Morgan has now rallied for 2 weeks into where there was support, then it became resistance, then it became resistance, and now it's at this level again. So I like JP Morgan, especially heading into earnings, especially if they beat earnings. But right now, I need to see it above 139. I want to see it close above 139. And then the next level I'm looking for is all the way up here in the 154 area. Okay, so let's continue to break this down. That's the trade that we just talked about there, 154. Nice potential. Again, you got to really be clear if they beat earnings. So I'm going to highlight that. So that's actually a part of it. And there's the trade in JP Morgan. All right, now let's not forget the rock star of 2022, which is industrials. If you have been a regular viewer of our channel and you are not trading Boeing for the last 5 months, what in the world have you been watching? We have been talking about Boeing and especially General Electric for the last 4 or 5 months. And just to really bring this home, if we put Boeing here on a monthly chart, and you can see what look at these candles compared to the way the market's trading. That's the last 4 months. That's not 2021. That's not 2020. That's this year. That's the end of 2022. So what does that mean? Well, I got to be honest with you. If you missed it, that's why you need to get this kind of research every day. You need to be in here tracking the rotation from week to week, from day to day, and understanding where the money's flowing right now, and then just hop on board. Where the money's flowing right now and hop on board. Industrials have been the belle of the ball for a while, and specifically Boeing. So if we go back over here and take a look at Boeing, look at the week that Boeing had last week. That's just the weekly candlestick. Again, this is why, and I'm going to say this, super important. If you get nothing else out of me for today, the number one thing that you need to take out of today, and it's actually in the lesson that we're going to work our way back up to the top of the newsletter, is you need to take the time in your down hours, whether it's on the weekend, whether it's when you get home late at night, whatever it is, you need to take the time to set your software up properly so that you can look at it in a heartbeat and say, wow, the money's rotating into gold stocks, or the money's in industrial stocks, or the money's coming out of semiconductor stocks. You need to be able to spot that in a heartbeat so that you're always in the right stocks at the right time. Look, we all know that edge means most of the time it works, but that also means sometimes it doesn't. But when you're in the right ideas, you're stacking the odds in your favor to have that time that it does work most of the time in your favor. All right. So very important. Write that down, put it on a Post-it pad, get your software set up properly to tell you sector rotation, and then make sure that you're doing it on a daily basis, the same way that we're doing here for our community, tracking it every single day. All right. So let's continue with the newsletter. Boeing rocketed higher, produced a big energy candlestick, big green body candlestick on the weekly chart. This is another one here. If you haven't been trading GE, make sure you take a look at GE Healthcare. That was where they spun off last week. Okay. Now, the one thing that is very interesting, this is kind of a little bit more of an advanced topic, XLE, energy. Hey, Jason, how's it going, pal? Happy New Year. If we get back into XLE, about a week and a half ago, they look like the leader of the pack for breakouts, like right over here. We're like, wow, this is fantastic. Consistently making higher lows, consistently making higher highs, ready to break out. And then we started doing this dance where it's 2 days up, 1 day down, 2 days up, 1 day down, 2 days up. And now we're right at the breakout level again. So on the energy stocks specifically, I've started to monitor them on the weekly chart, and I'm pulling out all that news until they actually pick a little bit of a better direction. So again, what I want to be clear about that is I am adjusting how I'm looking at order flow and how I'm reading the tape, specifically in the energy sector, because they've been a little bit of back and forth, and I want to cut out all that noise in that particular group. I'm not changing what I'm looking at. I'm changing how I'm reading it. So I'm going from the daily chart to the weekly chart, so it becomes a little bit more clear for me. Okay, so let's break down the breakdown of energy. All right, giving us ulcers with the 2 day up, 2 day down, 1 day down dance, lesson learned, watching it on the weekly charts at this particular moment. Tech stocks reversed higher on Friday. That was nice. We could specifically look at NVIDIA here. This is, by the way, get a little bit of a clue. This is one of my favorite stocks to trade every day. You can see volume was reasonable. Look at this volume right here and how it's trading right now. It's interesting, but volume was not outstanding. It wasn't like one of these kind of days over here. When you compare this volume right here to what the market did, it doesn't look the same. So how does that affect your trade aggression, your level of risk that you're willing to accept? Nice breakout in NVIDIA, nice reversal, but the volume was not outstanding. So again, going back to, we need to see follow-up. That was great. Can you do it again? That's what we're looking for in the tech stocks. Now, keep in mind, the semiconductor stocks specifically have been very, very weak for the last 6 weeks. We're actually going to get into that right now. Day-to-day opportunity until they can string together a few strong days. Now, we're going to work our way now up the power pyramid. So we just talked about the market. We just talked about the sectors. Now we're going to work our way up here into the industry groups. So we're kind of working our way up to higher ladders of specificity on the ideas that we're looking at. Internet retail put up some good numbers. Chinese stocks leading the way. So specifically here, BABA, PDD, and JD. So remember what we talked about at the beginning of today's call about the optimal entry and how far some of these stocks have moved. Some of these stocks are super obvious in breaking out. You just need to dive in just one step further and say, how far have they moved recently? Are they an entry now, or do I need to wait for them to reset? You make that call on your own. Other stocks that are interesting here, and I want to point out a news story here. Restaurants and footwear, a couple of popular stocks, Starbucks and Nike. Nike, we've been talking about, has been really, really solid holding the bid, even when the market was pulling back after this earnings. So now Nike is on our watch list. You can see the next level, and Nike's up around 137. The big lesson I want to take and give you over here, right? We all love to read stories. We all love to read the news. We like to keep up on social media. We like to keep an eye on everything, right? Starbucks right here had a downgrade right here. And look what the stock has done since the downgrade. If you are a fan of reminiscences of a stock operator, like I know everybody is, everybody should have it on your bookshelf, right? There's a segment in Reminiscences of a Stock Operator where he says the daily news back then, the daily headlines, were also known as the daily dope. I don't know if he used dope intentionally. It might have just been a slang term in the 1920s. But the point that I want to get across here is this, and this is actually going to take us right back to the top of the newsletter for the lessons, right? That was a downgrade. And a lot of people, a lot of new rookie traders who are in our community are like, we're going to short this bad boy because the downgrade, it's definitely going to go down because of the downgrade. Well, the stock opened lower and then basically traded higher for the next 2 weeks. You have to read and pay attention to the headlines, do your research, but you're ultimately going to make money by reading the tape. So if something significant happens, you need to have a reference point to say, okay, that was really good news or really bad news. So let's take Nike, for example. earnings popped up. Now you have the line in the sand where it started. Now, can they follow up that story with more buying pressure that matches that story? Starbucks on the other side of the tape had a downgrade. So Starbucks opened lower. Now we're sitting there saying, okay, that's fantastic. We have a stock to look at that has a catalyst. Can they follow up that lower opening and the downgrade with more selling? If they do, cool. I'm going to get in there. I'm either going to buy puts or I'm going to short sell. If that happens, then I plan to join them. If that happens and it does not give me what I want, I'll just sit back. I'll have another cup of coffee and I'll go look for a different trade. Most of the traders who had a tough 2022 fought the tape. This can't be happening. This shouldn't be happening. I know this company. The only thing that matters is it going up or down? Don't fight the tape in 2023. You will keep more cash in your pocket. And then when things line up, you'll have a much, much healthier mindset and you'll have a bigger trading account to take advantage of those opportunities. All right. So let's continue to work our way through the industry groups. Credit services woke up thanks to the holidays. So specifically in this group, I'm watching Visa, MasterCard. Both of those are near breakout levels. American Express. PayPal we want to take a look at, but if we dive a little bit deeper into Visa, you can see the nice rally. It's got a big, big level right here. So many stocks are at a big level. PayPal is the one that I want to take a look at right here. Now, PayPal is still clearly in bearish order flow, but again, remember we just said about the news, there's been some recent good news, upgrades and whatnot. This is a potential change of trend, not a change of trend yet. You can still see this big move to the downside. It's impressive. The longer PayPal goes sideways, especially on lighter volume. Now, this is a big advanced thing. Look at the volume on the way up. Look at the volume pausing significantly less there. That means that we are pausing on lighter volume. The longer this goes sideways on decreased volume compared to this rally, the greater the likelihood that I believe I'm going to start to look to build a position in PayPal. So it's not just the first rally. That's cool. That's a start. But now we want to see a push and a pause. If that pause continues to go sideways without a lot of activity, that's likely going to be a reversal of that 7 or 8 month downtrend. All right. So let's continue with the ideas for today. Hopping on over. We've been talking about semiconductor stocks. My favorite one here is NVIDIA. And there's the stock market power pyramid. So I want to work our way all the way back up here because Friday gave us some really good ideas. All right. Friday was perfect. First reason was the amazing trend that unfolded, obviously, right? So again, that was supported by volume. Certain days, weeks, and months give you a gift, and you need to be ready to bring them home. So again, however, many traders missed the rewards for one simple reason. They weren't ready. If you did not take advantage of last week, and again, going back to Boeing, I'm not just talking about what happened on Friday. This was just absolutely incredible. Absolutely incredible. You got to set your software up to give you those ideas. All right. There it is. Go get it. That's what your software set up properly. I'm sure many traders closed their trading accounts on Friday and complained they missed it. Too bad. Everything we analyzed during the day was in sync. In our community, we call that harmony. All right. The second reason that Friday was a perfect day and was the perfect lesson. The market gave us a glorious lesson in tape reading, but more importantly, the fact that anything can happen. By all accounts, heading into Friday, the next big day in the market should have been lower, but it wasn't. We went higher with a vengeance, went higher with a lot of volume, right? Not accepting the fact that the market can and will do anything is why many traders' acceptable losses become account killers. You don't accept the risk before the trade. You don't accept the fact that anything can happen. And when something you don't expect to have happen does and throws you for a loop, you end up now looking for reasons to hold on when you should have got out, look for the next trade. Now, here's the big part, okay? A mental stop loss is simply another way of saying, I'm not expecting it to go against me. It's just flat out amateur. Now, here's the big thing. You get a double whammy here, all right? You missed a great opportunity on the buying pressure and you lost money, not to mention the angst of seeing the charts later at night. So I want to get this across really importantly. There's nothing worse to a trader that when you miss opportunity. But when you're actually fighting the opportunity, not only are you losing money on the trade that you should have kicked out, you're also now not in position to take advantage of the obvious move in the other direction. So you actually get a double loss there, and it just absolutely crushes you mentally over the next few days. So I want you to take this into 2023, but especially today, because the market's going to open in about 90 minutes. If you happen to be watching this on the video a little bit later, you can still have this information. Make sure that you understand that before you put a trade on, anything can happen. When you map out your profit targets, when you map out your initial target and your stop loss, just let the trade play out. Don't second guess it. You did all of that work prior to the trade. If it happens to trade down to your stop loss, kick it out, get your capital back, and go to another trade and look for the next opportunity. Get all your buying power back, close that position out, and immediately look for other opportunities to make that money back. All right. Covered a lot of stuff today. We covered a lot of different groups. We started with the market, started with the sectors, talked about an accumulation day, broke it all the way down to a bunch of stocks to look at, both from a sector perspective and from an industry group perspective. The one thing I do want to point out in the newsletter, if you haven't, below the video, you can get a copy of this, of the daily ticker, the daily newsletter. We actually have guest contributions today. First one from Lynn Ramirez, and she does a really, really good professional breakdown of the way price action happened on Friday and whether or not it was a breakout or not, which Lynn breaks down here. And then if you go a little bit further down, we actually have insights from John Napolitano, who is our options trading pro. If you traded options in 2022 and found it a little bit challenging, definitely download your copy of this newsletter and click on the left side over here. If you don't see it, you can actually click over here. You'll see the outline. Scroll down to the options part of this, and you'll see John's breakdown for the entire year. Mistakes, challenges, and how he plans to overcome them and have an even bigger year in 2023. All right. Those are some pretty big lessons. Look for a new video that we have coming out soon on the 10 biggest lessons that I have from 2022. That should be out this week as well. Have an awesome day, everybody. Thank you so much for joining me. If you happen to be watching this on the video, or if you're watching it live right now, do me a favor, give us a thumbs up, make sure you subscribe, and click below that video and download this newsletter. You're going to be glad you did. Thank you so much, everybody. I'll speak to you soon.